Now, you spoke about stoking investments, and that's clearly where the focus should lie. But what needs to be done, Mr. Sinha, to get India's investment to GDP ratio back up to those high 30s, which we had maybe a decade or more ago? But do you think it's only a matter of government trying to stoke it, or do you think certain ingredients have to fall into place? Because it seems to be getting stuck in the low 30s for the last many years.
Well, I don't think it's that easy to do a simple apples to apples comparison between what was happening about 20 years ago and now. The nature of investment itself has changed. There's a lot more leasing in the economy that's going on. For example, in the airline industry, you're leasing planes as opposed to buying planes. So that's changed qualitatively. The whole nature of the economy has become less capital intensive. People are getting more out of less. A lot of it has been digitized, where again the investments are not that necessary, and you can get by with a lot less. So you really can't do an apples to apples comparison between what was happening 20 years ago and what is happening right now. What we really have to look at is GDP growth, which of course we think is going to be very strong going forward. You've got to look at job creation, which of course in the high productivity and the export-oriented sectors is starting to boom quite quickly. And you have to look at the kind of money that we are attracting into investments, both domestically through, obviously the stock market and other forms of investment, as well as both private equity venture capital flowing in from overseas, as well as money flowing into the capital markets, FPI flows. So if you look at investment flows right now, investment flows are at unprecedented levels. They've never been this high. And of course, government is investing in a very substantial way as well. And that's why this notion of investment-driven growth, I think, is really starting to emerge because of these big sort of investment flows that we are beginning to see.
You spoke about investment flows, so let me bounce off or tick off this one issue which I wanted to bring up with you, which is the issue of this capital gains tax waiver on bond transactions by foreign investors. Because it is one reason you will agree that India is not part of global bond indices. And the consensus view is that if India were to address this issue, we could get tens of billions of dollars coming into over the course of the next year or so, as India becomes part of those bond indices. Is that under consideration at the level of the government, and do you think we could have a resolution or decision on that soon?
So then I'm not a member of the government, I'm a member of the legislature, I'm a member of parliament. So what's going to happen in the budget, what the policies of the government are going to be, I think the government will address those, and they are of course best positioned to tell you about that. But of course, as you know, the government has been taking very substantial steps to open up our debt markets to enable global bond investors to come into India. We've attempted to remove the hurdles that are preventing us to being included in some of these important global bond indices. And all of these efforts are underway, and our companies have also been able to borrow quite intensively in capital markets overseas and raise ECBs, external commercial borrowings. At the same time, of course, we always have to be careful about capital flows, particularly debt flows coming into India, because we want to be in a situation where we can balance it in terms of our own external borrowings as well. So like in many other things in government, there's a trade-off here between attracting bond inflows and making sure that our external account is in balance and is robust. So that's essentially the trade-off that has to be thought through. But I think the government is proceeding methodically and in a very comprehensive manner to addressing some of these challenges that bond investors have brought up.